Hey guys, hope you're doing well out there. Today we're taking a look at the TJX Companies, ticker symbol TJX. This one has quietly outpaced the returns of the S&P 500 really over any length of time, certainly over the past 10 years, significantly outperforming the S&P 500 benchmark. But year to date, you are seeing some levels of underperformance. So we'll see if there's an opportunity that lies in the stock, at least at the current price and valuation. Now, this was a video highly requested by a longtime subscriber, so shout out to you, Jesse. Also, let me know in the comment section below if you have other companies you want me to cover. Might not get to it right away, but maybe over a couple months, might take eventually a crack at it. So leave those in the comment section below. We got a long video to get into, so let's not waste any more time. So TJX Companies, you're looking at a company close to $116 billion in market cap. So certainly not a small company, a small retailer really by any means. You're also getting a 1.5% forward dividend yield on this, close to $1.50 on a per share basis. We'll talk more about the dividend, which is actually a big part of this company story as we move along in the video. Now, before we get into really the financials, the technicals, all the things we usually get into, let's talk about what this company does, really what their business model is. So you might know them as the company behind a lot of popular stores you might have eventually actually shopped at, those being TJ Maxx, Marshalls, Home Goods, and HomeSense and Sierra in the US. In Canada, they operate the highly popular Winners, HomeSense, and Marshalls. And then over in Europe and Australia, they're operated as TK Maxx and HomeSense. So likely at some point or another, you or someone you know have probably shopped at these retailers. Now, the way they differentiate themselves against another retailer, say Macy's or Kohl's in the home industry, is that they're the leading off-price retailer. And so the way they do this is by offering a rapidly changing assortment of quality, fashionable, brand name, and designer merchandise that's generally 20 to 60% below the full price retailers. So let's say you pick up a piece of clothes at TJ Maxx, let's say it's Calvin Klein, and that would be roughly priced 20 to 60% lower than what you might find it at a full price retailer, even might find it at the Calvin Klein store. So you might be asking, how in the world does TJX Companies offer their merchandise at roughly 20 to 60% below the full price retailers? And a lot of that lies into how this company operates. So they take advantage of a wide variety of opportunities. Those can include, let's say, department store cancellations. Let's say you had a store that was supposed to open, or maybe it even opened and it's just closing down. Yeah, a lot of that inventory will need to get moved and likely get moved at a discounted price. So TJX will come in there, scoop up some of that inventory at the reduced price, and then further lower the prices as they sell those. Let's say a manufacturer makes up too much of a product. TJX will again come in there, pick up some of that excess product at a discounted price, and then sell that at their TJ Maxx, at their Winners, at their HomeSense. Along with that, you have closeout deal when a vendor wants to clear merchandise at the end of a season. So let's say you're moving into the winter season, you'll likely be moving through a lot of shorts and dresses, a lot of those summer apparel items. Yeah, TJ Maxx or TJX will really come in there, scoop those up at a discounted price, and then sell those. And so really that's how they're able to offer 20 to 60% below the full price retailers' regular prices on those same merchandise items. And understanding this part of TJX is actually, I think, a really big piece in understanding the whole story. This is really how their company operates. They're focused on delivering great value to their customers, and the way they do that is by heavily marking down on popular products. Now, the CEO's comments in the latest quarter did echo the same thing, that they're still laser focused on delivering their customers with exciting values on great brands and fashions, and inducing a treasure hunt shopping experience for their customers every day. Now, you might be asking what it means to have a treasure hunt shopping experience. That really means is where a full stock of items is not offered. Instead, what you'll get is a greater variety of items available, but only a few of each on the shelves. And so let's say there's only one or two of a particular item available at any given time. And so in order for this model to be considered what you call as treasure hunting, at least in retail, some of the items need to be super desirable. And so what that'll do is allow customers to occasionally find those highly desirable items that provide them with high value as a form of high reward. And so that will lead to them thinking they've sort of found a treasure, they found a great item at a bargain price. And so that could mean at a TJ Maxx, Marshalls, or Home Goods, that could mean finding a luxury brand clothing piece for roughly 60% below the standard retail price. It could also mean discovering something that's super unique that you might not find at other retailers or elsewhere. Now, you also get the fact that since these stores never have the same stock twice. The customers feel a greater sense of urgency when making the purchasing decision. It also means that you'll have the customers coming back more likely to see what else has been in store where they can maybe find another good deal. Now, as I was going through this for TJX, it really reminded me of another similar company, and that is Costco, as Costco really has a similar model. In fact, on their customer service page, they say that they have a treasure hunt atmosphere, and they're describing that as being one of the most exciting things about shopping at a Costco, is that you never know the incredible deals you might find from one visit to the next. And then Costco members know the trick to get the best value on exclusive or one-time buy items is to visit often. And this really reminds me of what TJX is doing, really a similar model where you have to go in to these stores to find out what new items they might have really at a good bargain price. And so this is, I think, one of the reasons why TJX has been so successful in fending off the competition, at least from online e-commerce. You have companies like Macy's and Kohl's that Amazon really has taken a good chunk of their market share, but it's really harder to replicate a treasure hunt experience online. And I think that's one of the reasons why this company has been more resilient in pushing back against a company like Amazon eating into their market share. Really, it's one of the same reasons why Costco has been so successful in fending off a company like Amazon. Now, there is still big differences between Costco and TJX. First of all, that is the membership, the fact that you have those recurring members over at Costco, really building a brand loyalty and getting that recurring revenue. The other thing you have with Costco is they really sell in bulk, and so you have large dollar volumes moving through your warehouses. So those two things you don't get with TJX, but you still get that treasure hunt shopping experience. You get the fact that this is a company continuously moving through inventory and changing their assortment of brand name and designer merchandise. And so this is, I think, the main reason that has people coming back to their stores time and time again. One of the main reasons, I think, why this company has been so resilient against the online e-commerce push, and then the fact that they're an off-price retailer discounting heavily against brand name products. I think one of the reasons why this company has been so resilient at a time of high inflation, really where your customers are getting sliced, this company is still providing great value to their consumers. So understanding how this company operates and how their business model works certainly gives us a good starting point into analyzing really how this company should also be valued. And here I have a 10-year price to cash flow pulled up compared against Costco. And so in orange you have TJX, and then in blue you have Costco. Costco right now trading closer to 33 times a price to cash flow, whereas you have TJX trading closer to 19 times. Now, in my opinion, both of these trading rather expensive if you were to ask me on a cash flow basis. Certainly, I'd say Costco is getting far more stretched than TJX, but even TJX, likely you see this one trading somewhere between 12, 13, maybe up to 15, 16 times. Certainly, as you get closer to 20 times cash flows, that is where TJX certainly starts to become more expensive, really might not be a great value based on a cash flow at this time. So that's something to keep in mind. Again, you have a $115 billion market cap. Keep that in mind as we walk through their financials. Now, speaking of their financials, this is a company that reported earnings right about a week ago. They reported their Q1 results. That was for fiscal year 2025. So this year, TJX starting their fiscal 2025. Now, Q1 revenues came in at $12.5 billion. That was good for 6% growth year over year. That came in line with estimates on Wall Street. And then you had GAAP EPS of 93 cents, beating estimates by close to 5 cents. Now, in retail, even in fast food, really anytime you have a physical store presence, the important number to look at is the comp store sales. Really, that's the sales for existing stores, how they grew. And we see sales on a comp store basis grew at 3%. That came in at the high end of the company's estimates and were entirely driven by an increase in customer transactions. So that's certainly a good statement to hear, the fact that they're still growing their comp store sales, although be it at a small 3% clip. This is a very mature company, but the fact that all of those sales were driven entirely by more customer engagement, more transactions, certainly is a good thing. You don't want to see high store sales driven purely on the basis of discounting merchandise, because that will absolutely obliterate your margins. Now, they also did increase their fiscal 2025 pre-tax profit margin, otherwise known as EBITDA margin, and as well as that increased their EPS for the full fiscal year. So for the upcoming quarter, for the current quarter we're in, which is their second quarter in fiscal 2025, this company is expecting comp store sales to be up a similar 2 to 3%, and then EBITDA margin to come in right around 10.5%. They're also expecting diluted EPS to be in the range of 88 cents up to 90 cents. We see estimates on Wall Street slightly ahead of that, as estimates are closer to 92 cents. That's on the average side. The high end closer to 96 cents. So despite this company guiding closer to 88 cents to 90 cents on an EPS for the current quarter, estimates on Wall Street slightly higher. I think that is due to the fact this company, on an earnings basis, at least on a forward priced earnings basis, trading closer to 25 times for an off-price retailer like TJX. Closer to 25 times, certainly an expensive price to earnings multiple. This is one you likely want to pick up underneath 20 times. That is really a multiple that would make more sense. Anytime you get this, I think closer to 15 times, that's probably when you're getting a far better value in terms of the stock itself. Also, for the fiscal full year 2025, this company expecting those comp store sales to be 2 to 3% higher than last year. Also, again, increasing their full year EBITDA margin to roughly 11%. So this company expecting 10.5% EBITDA margin for the current Q2, and then full year EBITDA margin to be roughly 11%. What you can expect is Q3 and Q4 EBITDA margins to steadily increase as you get to the holiday quarter, which is certainly the biggest for any retailer, including TJX. Those EBITDA margins likely will continue to get bumped up. And then full year EPS expected to come in at $4.03 up to $4.09. So even on the midpoint, you're looking at $4.06 as full year diluted EPS. And this is a company paying out roughly $1.50 on a full year per share basis in terms of a dividend. So certainly you see from that perspective, not a large payout ratio, one where they still actually have a fair amount of room to increase on that dividend. In terms of growth, both on the earnings and revenue side, this is a company expected to grow in the mid single digits percent. You heard comp store sales expected to be roughly 2 to 3%, and then with the new stores they open, roughly around 15 to 20 every quarter, you'll get a couple more percentage points of growth on your sales and earnings. And so this is a company expected to do roughly that 4 to 5% growth both on the earnings and revenue side. Very consistent and slow and steady growth over the next couple years. And that's really what you get with a company like this. But again, at a 25 times forward priced earnings multiple, certainly kind of expensive when you factor in the growth rates that this company is expected to see over the next little while. Now, what you also get with TJX, like we spoke at the top, is a dividend, and one that is consistently growing. In fact, in April of this year, they announced a 13% hike on their annual dividend, and that marked the 27th dividend increase over the last 28 years. Now, I want to take a moment to kind of talk about this. This, in my opinion, is actually a really important piece that shows me that management certainly is competent at their job. You see, this is a company that consistently has been raising their dividend, but during the COVID pandemic did actually pause their dividend for a brief moment. And so that shows me that during times of uncertainty, this is a company with a management team that's willing to pull back on maybe unnecessary expenses in order to make sure the core business is doing just fine. And so you had all those store closures, and so they weren't very sure about sales and earnings, and so they pulled back on that expense of the dividend. And then once they were able to continue growth on both, again, the revenues and earnings, they resumed that dividend and continued to grow it. And so this pause in the dividend, while it might not look as pretty on paper, instead of raising their dividend for 28 consecutive years, they've only raised it 27 times over the last 28 years. I think that pause in the dividend, certainly a good thing, showing me that management is competent enough to pull back on the dividend. You had a lot of companies continue to pay the dividend during COVID, and that really proved to be challenging for them because they had to pick up a ton of debt in order to maintain that dividend. And so you get that consistent dividend growth. And then on top of that, this is a company that's grown their dividend at a compounded annual rate of 20% over those 28 years. And so certainly you don't just get dividend growth, you get actually phenomenal dividend growth, close to 20%. And you see over the past quarter, raised their dividend by roughly 13%. And so while you might not be expecting close to 20% growth moving forward, even if you expect 15%, that's roughly doubling your dividends on a 5-year basis. And that allows you to hold the company for large periods of time. Whenever you get strong dividend growth that they're able to maintain without really pushing up their payout ratio all too much, you see $1.50 for the full year, and this company is guiding for close to $4.06 in terms of full year EPS. So they certainly still have room to continue to do that dividend hike of close to 15 to 20% year in and year out for the next little while. That is certainly impressive to see over at TJX. In terms of the financials for the most recent quarter, looking relatively in line to what you would expect. You saw the sales rise roughly 6% year over year, up to $12.5 billion. Along with that, you have cost of sales. This is a retailer, so you have those merchandise and the cost of those sales increasing relatively in line up to 8.7 from $8.4 billion. Top that, SG&A ticking up to $2.4 billion. Company earning a little bit more in terms of interest income on the cash on their balance sheet. And so you get down to net income, roughly $1 billion. Last year, you were closer to 900 million. So you tack on roughly 600 million onto your top line, and roughly 200, call it 150 million gets bolted onto your bottom line. Those are improving margins like we saw. Company headed in the right direction in terms of their EBITDA margin. You also get the diluted EPS growth up to 93 cents a share. Last year, you were at 76 cents. This is a company that does have a buyback. And so you see shares outstanding going down on a year-over-year basis. In fact, for the full fiscal year, they expect to repurchase roughly another $2 to $2.5 billion in terms of stock buybacks. So certainly $2 billion for a company close to 115, not a huge amount, but certainly if you can continue to reduce those shares outstanding, helping your diluted EPS just a little bit, you're also not paying dividends on those retired shares, certainly proving to be a good thing in my opinion for the long term. Not really moving the needle all too much, but still in fact a good sign. Now there are still points of concern with TJX, and the first one being the balance sheet. Not the best balance sheet. You're looking at roughly $5 billion in terms of cash and equivalents, another 1.1 in accounts receivables, and then you have 6.2 in your merchandise inventories. Year over year did tick down. That is actually good to see. Not sitting on a ton of inventory despite continuing to grow their sales. And so your total current assets come in at 12.5. That is balanced out by roughly $10 billion in current liabilities. So from just a current ratio, it looks good. It's close to 1.2, 1.25. But keep in mind, $6.5 billion, in fact, half of those current assets are in your merchandise inventories. And so really those aren't as liquid as current assets might seem. If TJX looks to move through those inventories rather quick, they'll have to discount those heavily and hurt their EBITDA margins. And so certainly I wouldn't say this $6.2 billion should really be considered as current assets, not extremely liquid. And so from that perspective, the current ratio not looking as great really in my opinion as it does on paper. And so this is a company that should in my opinion actually bolt on just a little bit more cash in order to strengthen the current assets on their balance sheet. All other things looking relatively in line. You're looking at $30 billion in current assets. And in terms of long-term debt, not a whole lot, close to $2.8 billion, not really ticking down year over year, but still not a large amount of long-term debt that this company is sitting on, at least at the current time. From a cash flow, we pull down that $1 billion in net income. That turns into close to 700 million in operating cash flows. This is a company that does have a fair amount of property, plant, and equipment. So doing a fair amount of capex, you are building out new stores, you are also renovating your existing ones. And so you're looking at roughly 400 million in capex on property additions. And so you get to free cash flow right around $300 million in the most recent quarter. So not a whole lot of free cash flow for a company close to $116 billion in market cap. Now keep in mind, this was their Q1, so as they head along in the year, especially as they get down to their Q4, the free cash flow dramatically does improve, considering that is their holiday time period. They'll generate a far greater number in their operating cash flows. But still, from a Q1, just 300 million in free cash flow, certainly not anything to write home about. And so what they do with that 300 million, basically use it all to pay their dividends, and then the remainder, $500 million, they're using in the buyback of their common stock. And that actually they're buying back from just purely their cash pile. As you see, at the start of the year, they were close to $5.5 billion in terms of cash on their balance sheet. Now that is down to $5 billion. So really their buyback is something that in my opinion they can actually hold off on just a little bit more in case they wanted to. It's not really doing too much for the company right now, especially with their stock price racing up. And so maybe they can hold off on that cash just a little bit longer in order to save on that buyback for a larger dip in their stock. And speaking of dips in the stock, that's something you consistently buy and you don't get a whole lot of. This is a 12-year chart. Yeah, more than a decade ago, this was a company trading close to $20 a share. That has now raced up to $100. So very consistent growth. As you see, this is a company making a set of higher highs and higher lows for more than a decade. So you get extremely predictable patterns in this one, and those are the ones you look to trade. At the current time, we are pushing up higher than the upper end of our channel, and so at this point certainly wouldn't be excited to jump into shares of TJX from a technical perspective. You, from one case, do have an argument that this company certainly has no upper head resistance and can continue to rally for at least a little bit, but this is a retailer, and so certainly when you're sitting closer to 24 times, 25 times on a forward earnings multiple, I think at some point, as you keep pushing up higher and higher without really having those earnings grow as fast, you'll get an outlandish valuation, which really is hard to command on these retailers. Certainly it's no AI play where you can continue to push the valuation just purely based on the story. And so for that fact, I wouldn't be overly excited for a breakout to the upside from here. In fact, what I would be more excited about is a breakdown back into the channel and we get a pullback close to the bottom end of the channel, let's say somewhere in the mid 70s. That is really where I would get excited in picking up shares of TJX. That is where it would come back and test this nearly decade-long trend line and pull back to a level of support we saw back in the March of 2023. Now, that is an ideal case where you have a large, close to 20 to 30% pullback in shares of TJX. Certainly not one you can count on, maybe if you're more eager to get into this name. Certainly if you are more eager to step into shares, I would do it somewhere closer in the midpoint of the channel. That is near your mid 80s, basically halfway down into the channel. Really, that is where I would look to open a position if you are more excited with this stock. That would still be another close to 20% pullback, so by no means a small pullback, but one that would actually make sense from a long-term buy and hold investment. Certainly this is a company that you buy and hold for a long period of time. You buy and hold for that dividend, and then you buy and hold for capital appreciation. This is not one I certainly would be looking to trade in and out of, at least until it gets down closer to the 70s. I wouldn't look to consider doing that. This is a company that's doing a lot of things well. Certainly the treasure hunt shopping experience that they're focusing on and providing extremely good value to their customers. This is a company that reminds me a ton of Costco, just on a smaller scale and more on a discounted level without the membership recurring revenue. But still, a lot of good things to see with TJX Companies. At this point, the valuation just is a little bit too rich for my liking, and I would wait for a pullback at least in the mid 80s before stepping into this one. Certainly if you have no position, if you are already holding shares of this one, I would have no problems continuing to hold on at these levels, or at least maybe trim some and lock in those gains. That was my take on shares of TJX Companies. Let me know your thoughts on this one in the comment section below. Also, leave down in the comment section any other companies you'd want me to cover in the future. Might get to it at some point or another. As always, thanks so much for listening, and I'll catch you guys in the next video.